It's very welcome news to see that inflation is, starting to come down. I think that's important input into how we're thinking about where policy needs to go. I mean, the November CPI report, which was the latest data point, that was basically largely as expected. And so the way I think about what the most recent monthly numbers are telling us is that we can have some confidence or more confidence about the inflation projections, which do have inflation moving down this year. So,
Right.
Remember last year, inflation was really exceeding expectations of any forecast. And of course, that wasn't welcome news. Now we're starting to get some reports that suggest that, okay, maybe inflation is beginning to come back down. The other thing about wage growth, as I like to point out to people, is that yes, it's been strong, but it's not keeping up with inflation. So workers, are not getting, they're still feeling the brunt of that high inflation, even though they are making higher wages in nominal terms. So it still is the case that inflation is the number one concern of the economy for both businesses and for households, because it really is costly to actually have inflation running at the levels it's running. How much at any one particular meeting is probably less important this year than it was last year, where everyone was focused on that. But, to my mind, we showed at the December meeting that the economy and the financial markets were able to handle that 50 basis point increase. We're not at 5% yet. We're not above 5%, which I think is going to be needed given where my projections are for the economy. So I just think we need to keep going, and we'll discuss at the meeting how much to do at any one particular meeting. But my projections and my view of the economy is that we need to do more. We need to get above 5% and then hold it there for some time. I mean, one of the things that's been interesting about this period is that we have seen really job openings. The demand for labor has well outpaced, right, the supply of available workers. And so I do expect that as we get demand and supply in the labor market back into better balance, we'll see some increase in the unemployment rate. But remember, the unemployment rate is really extremely low by historical standards. It's like, multiple decades low. So, that increase in the unemployment rate could very well, most of that rebalancing, right, in the labor market could be much more on the demand side. I'm anticipating we'll see some increase in the unemployment rate, but that it'll be less than one would typically see in an economic slowdown. I think we're starting to see our policy actions do what they're intended. But I do believe we have to continue raising from the current level of the funds rate and then hold for a while so that we get that back to price stability in a timely way.